Assalamualaikum and hi everyone. Before we begin, let us introduce ourselves first. My name is ARIEF HYKAL bin Mohamad ZUKMANI, 2025-1984-05.
Hi, Assalamualaikum. My name is Mohamad AIMAN bin KHAIRULRIZA with the metric number 2025-100-189 from the class TBA 2723C.
Hi and Assalamualaikum. My name is Mohamad bin ARSHAD bin IMRAM SHAHRIL.
Hi, my name is Mohamad GHAZI bin MAZLAN.
Assalamualaikum and good day. My name is DANISH ARSHAD and I will start our video presentation with the introduction part. This case study examines the impact of the COVID-19 pandemic on Malaysia's economy and the role of monetary policy in supporting recovery. The pandemic causes a severe economic downturn in Malaysia, mainly due to the movement control order, which disrupted economic activities and increased uncertainty. As a result, strong policy intervention was required. Bank Negara Malaysia responded by implementing monetary policy measures such as interest rate cuts, liquidity support, and market stabilization. Therefore, this presentation highlights key issues related to the monetary policy and interest rate, money supply and liquidity management, as well as the bond market and capital flows to understand how these measures support Malaysia's economic recovery.
So, in this slide, I will explain to you how Bank Negara Malaysia will respond to the economic impact of the COVID-19. So, during the pandemic, Malaysia experienced several economic shock with a sharp drop in economic activity. Because of this, Bank Negara Malaysia need to implement a supportive monetary policy to help the economy to recover while still keeping the inflation under the control. So, for the first one, Bank Negara adopted an accommodative monetary policy stand, and according to the IMF 2021 Article 4 consultation, this approach was suitable given the weak economic condition and low inflation in 2020. One of the key actions taken was reducing the overnight policy rate. In 2020, the OPR was cut by a total of 125 basis points, bringing it down to the historic low of 1.755%. The main aim of this was to lower borrowing costs and encourage spending and investment. As a result of the rate cut, the financial condition became more supportive with the real policy rate close to the zero. Lower interest rate help reduce debt burden for household and business affected by income loss, and also supported the credit growth despite the uncertainty. So, most importantly, the inflation remained well controlled, showing that the policy did not affect the price of stability. So, as we can conclude for this slide, the IMF conclude that Bank Negara Malaysia monetary policy play an important role in cushioning the economic shock and supporting the early stage of the economic recovery. So, for this slide, we will discuss about how Bank Negara Malaysia should maintain a supportive monetary policy while ensuring strong financial vigilance based on our recommendation. So, firstly, we suggest that Bank Negara Malaysia should continue with an accommodative monetary policy stance until the economic recovery is firmly established. Maintaining low interest rate is important to support domestic demand, especially in a private consumption and investment, given the low inflation environment during the pandemic. However, monetary policy should remain flexible and data-driven. As the economy improve, Bank Negara Malaysia need to closely monitor key indicators such as the inflation trend, labour market recovery, and credit expansion to prevent the risk of economic overheating. In terms of policy normalization, any adjustment to the interest rate should be done gradually and communicated clearly to the public. This approach can help minimize financial market volatility and maintain investor confidence. In addition, for this recommendation, accommodative monetary policy should be supported by a strong financial surveillance. While low interest rate help reduce debt service burden, prolonged accommodative condition may encourage excessive borrowing. As a conclusion for this slide, maintaining a supportive yet vigilant monetary policy is essential to sustain the economic recovery while safeguarding our financial stability.
Now I will be presenting about money supply and liquidity management. One of the key issues highlighted in the IMF article is the risk of liquidity shortage during the COVID-19 crisis. As economic activity declined sharply, banks face the possibility of insufficient liquidity, which would have disrupted credit flows and threatened financial stability. To address this issue, Bank Negara Malaysia implement several liquidity measures to ensure sufficient funds in the banking system. One of the main action taken was the reduction of statutory reserve requirement from 3% to 2%. This move released additional liquidity and allow bank to continue lending to households and businesses during the economic downturn. In addition, Bank Negara Malaysia allow banks to include Malaysian government securities and Malaysian government investment issue as part of the SRR requirements. This policy ease funding pressures on banks and improve liquidity management. As a result, liquidity conditions remain stable, interbanks market functions smoothly, and banks maintain adequate liquidity buffers throughout the crisis. Overall, these liquidity measures were effective in preventing liquidity stress in the banking system. They were supported the transmission of monetary policy and helped maintain the confidence in the financial system during a highly challenged period. Our group recommends that Bank Negara Malaysia continue to ensure adequate liquidity in the banking system during the recovery phase. The liquidity measures introduced during the COVID-19 pandemic, such as reduction in the statutory reserve requirement and the flexibility in recognizing government securities, proved to be effective. These measures successfully prevent liquidity stress and help banks continue providing credit to households and businesses. However, as economic activity gradually recovers, we believe that these liquidity measures should be unwound in a cautious and gradual manner. A sudden withdrawal of liquidity support could negatively affect lending activities, especially for small and medium enterprises that are still vulnerable after the crisis. In addition, our group suggests that Bank Negara Malaysia strengthen its liquidity monitoring framework. This can be achieved through enhanced stress testing and regular assessment of banks' liquidity position. By doing so, potential risks can be identified early, ensuring that the financial system remains resilient as liquidity condition returns to normal.
For issue number 3, I will present on the bond market and capital flow. The IMF highlighted the impact of COVID-19 on Malaysia's financial market. In March 2020, the pandemic caused a global risk of event. This led to large capital outflow from emerging economies, including Malaysia. The outflow mainly happened because non-resident investors reduced their holding of nation government securities. As a result, bond market volatility increased. In response, Bank Negara Malaysia implemented accommodative monetary policy measures. These actions were supported by both domestic and international efforts, which helped to stabilize market conditions. When global financial conditions improved from late April 2020, capital inflow slowly returned. By the end of 2020, non-resident holding of Malaysian government securities increased by 8.2% compared to the end of 2019. This recovery shows improved investor confidence and the effectiveness of policy action. The IMF also noted ongoing effort to strengthen Malaysia's domestic financial and foreign exchange market, including expanding access to hedging instruments. For recommendation 3, we focus on strengthening market resilience and investor confidence. First, Malaysia should continue to deepen its domestic financial and foreign exchange market. This is important to reduce bond market volatility, especially during period of global financial uncertainty. Second, developing a more liquid bond market would help Malaysia better absorb sudden capital outflow rather than experiencing a sharp market disruption. Third, expanding the use of hedging instrument allow investor to manage exchange rate and interest rate risk more effectively. This encourage longer-term investment and improve overall market stability. Lastly, transparent and creditable monetary and fiscal policy are crucial to sustain investor confidence. Strong policy creditability help attract more stable capital inflow and reduce excessive volatility in the bond market.
So, for the conclusion, Malaysia's monetary policy response to COVID-19 played an important role in stabilizing the economy and supporting recovery. Lower interest rate, sufficient liquidity, and market support helped reduce financial stress and restore confidence. However, prolonged accommodative policies may create financial risk if not properly managed. Therefore, a balanced and well-monitored monetary policy approach is necessary to ensure long-term economic stability in Malaysia.